Hi there everybody, welcome back to my channel. My name is Rachel Geraci and I'm a real estate agent here in Pittsburgh, Pennsylvania with RE/MAX 360 Realty. And today I have a very special guest. This is Robert Wilson with Wilson Home Mortgage, and he is here to talk about lending here in Pittsburgh. And this is my main guy right here. So he's chock full of amazing information that he's going to share with us today, and I am so excited for you guys to watch this episode.
Well, hey, Rachel, thank you for the introduction. Robert Wilson with Wilson Home Mortgage, and we're going to talk about loans, why to buy, rates, rate buy downs, and lots of fun things today.
Lots of fun, very interesting things. So let's get started. That's fine.
Car handled real good.
This guy ran over himself in the car. True story.
That did happen. It
did happen, and somehow he is not dead.
Still living, still breathing, still lending.
So, the first point we're going to talk about today is why buy downs are a scam? Question mark?
Well, let's see. Rate buy downs, right? Everybody's excited. It's the hot thing. You know, I see all these TikToks of like, let's buy your rate down because it makes your payment lower for maybe 1 year, maybe 2 years. And the idea is you're going to refinance and you're going to stay with a lower payment forever. And I don't think they're wrong. I think rates are going to fall. But should you do the rate buy down? In my opinion, no, I would not do a rate buy down. The reason being is if it made financial sense, you as a buyer would be able to pay for your own rate buy down. But it doesn't because you're not allowed to. So what a rate buy down is, we're going to ask any third party, whether it be the seller, the builder, the realtor, really anybody that's not you as a consumer, to do the buy down. So does it make sense to buy down? If you can get the free money, maybe, but the better move in my opinion would be to apply it to seller's assist, right? Mm-hmm. So if we're going to get a credit from a third party, let's just reduce your cash to close. Because let's say we're going to spend $5,000 hypothetically on a buy down.
Right.
It's going to save you $100 a month. Right?
Yeah.
Or, you know, so even $200 a month. I would rather have the $5,000 in my bank account, let me collect the interest on it, and supplement my payments, right, with that money instead of just prepaying the interest. Because all a buy down is to the penny, you're prepaying 1% or 2% of the interest rate for the upcoming year, which is why as a consumer you can't do it because it doesn't make sense for you to give your money out ahead of time to pay some interest. So take the seller's assist, put it in your own pocket, and now you have $5,000. Well, I can supplement a payment for the next, literally the exact same amount. The amount is the same, 1 or 2 years with my own money while I'm accruing interest.
Why do you think they're so popular?
You know, it's gimmicky and it seems like a lot of people that are very payment oriented are like, let's get that lower payment. And it doesn't help you to qualify. We still qualify you based on the higher rate that it will be.
Yeah.
So it's not like, well, I can afford a home that I can't. Not really. And again, because it's the same pile of cash, there's no benefit to giving it out ahead of time.
Right.
I mean, it sounds cool to be like, well, I'm going to have this lower payment and someone else is paying for it. Take their money if they're going to get it. If you're going to get the assist, take the assist. Put it in your pocket.
Yeah.
Then make supplementary payments with that money.
Yeah.
Even if you put it in its own savings account and every month allocated $200 a month or whatever the difference would have been, it will, in 1 or 2 years, depending on what buy down program you're in, it will run out.
Yes.
And then it will be like, huh, terrific. Now that account is zero. And then you're back to the normal payment.
Right.
So,
do you see a lot of lenders, not that you would ever do this, but do you see a lot of lenders that will sometimes give somebody a pre-approval and they'll give them like a preliminary cost sheet and they're predatory in the way where they don't factor in the buy down? They're like, oh, you can get this, but then later they hit you with a buy down. Do you see that often?
I personally haven't seen that. I'm sure there's people out there doing, terrible things.
Yeah.
Right? But I haven't come across somebody being like, I just got bamboozled. Most people don't realize that they just get completely blindsided.
Yeah.
And it just comes to the end and I never see it. Right.
Yeah.
So, but I mean, it's possible that people are doing that. I mean, I think the people that are just hammering you with like, do the buy down, that's the concerning part. Like, what, why are we doing the buy down? Like, I'll let you do a buy down if you come to me like, hey, I really want to do it.
What's the kickback for doing a buy down for lenders? Like, why do they?
Nothing. They get paid the same whether you do a buy down, don't do a buy down. So there's no like, it's not like I sold a buy down and made an extra $500. No, you get the same payment. It's just.
But it benefits somebody, doesn't it?
Not really.
The person lending the money? Like the entity lending the money.
I mean, they're going to get to make a little bit of interest off of the money. It's more of a feel-good thing for a consumer. Like if you were just wildly irresponsible with your money, then Rachel, I guess let's pay your interest ahead. That way you can afford the payment every month. Yeah. But if you can just not spend it, like get it from the seller, put it in your account, and use the money every month.
Well, what do you think about refinancing instead of buying down?
I think that's a way better move.
Yeah. So within 2 years, that's usually the window.
So that's another just common, misconception there. What you refinance when it makes sense, right? Okay. So let's just say rates are terrible right now, right? Yeah. So let's just say you start out with a rate of 8.25, right? So you're at 8.25, like no one's excited about that. Mm-hmm. And let's say it's July of next year, and you're like, oh my goodness, I could refinance down to 7.5, and it's not going to cost. Like you don't want to do. There's a lot of online places that will call you and try and be like, it's going to cost you $10,000 to refi. That is not the move. But if you have somebody that you trust and everything, it's like, all right, we're going to refinance, and you can essentially do it for very little out-of-pocket cost. Like your transactional cost and your break-even point will be within 6 months. Yeah. Let's refinance you in June. Let's refinance you in July of next year. Wow. So you don't have to wait 2 years. You don't have to wait 12 months. Okay. Right? And then that's typically how I structure it is your break-even is going to be within a 6-month period. So if rates fall again, so let's say we do it in June, and then it's January of the next year, and rates are down again. So we started at 8.25, and then next year we went up to 7.25. And the following year, we go to maybe not even a full percentage. Maybe we just go to 6.5, but it's essentially almost free. Why wouldn't you do it?
Right.
Can we just ride the wave down? Yeah. And rates will get back into, I don't know, I'm guessing. My prediction is we'll be back in the 5s. We'll go back into the 4s. I truly think we're going to see rates hit the 3s again. I mean...
Well, let's go into that topic. Okay. When do you think we're going to start seeing that happen?
Oh, that's a good one. So, I think we have an election coming. I think politics do play into a lot of things, including mortgages. Yeah. Right? I don't care what side of the fence you land on politically. Let's say you're, right now, the Republican Party would be like, we have the worst rates in memorable history. That's correct. They're not wrong. Yeah. So if the other side, they're going to be like, well, we had to raise rates for inflation. Also, that's correct. That's factual. Mm-hmm. But for their motives, they could be like, all right, we handled it. We're getting it under wraps and we're already reducing rates. That sounds like a pretty good campaign to me, right? Perfect. So I think rates start coming down in March. Okay. And in April, May, June, I think we'll have a lot of refinances. My guess is between June and August of next year, we're going to have a substantially better rate. Mm-hmm. Do I think we'll be in the 3s? No. But do I think we'll be back out of the word 8? I don't think I don't project me saying 8 a lot. I don't even know if I'll be saying a lot of 7s. I'm hoping it's a lot of 6s.
Yeah. Which, if you think about, 2021 and 2020 and even, 2022, 7, 6, that sounds terrible still, like thinking back to then. But I mean, it's so interesting how the market works. Whenever people are going to hear that 6 number or even that 7 number, they're going to be like flocking to buy houses. Yeah. Because it's so much better than 8.
Yeah, I think we're going to have a lot of people come out. I mean, right now we have people that are stuck in their home a little bit because I've got 1.9% or 2.9 or anything just hilariously low, right? So do they want to go move to go get 8.25? No. I don't want to do that. They don't want to do that. No. But if all of a sudden we're getting used to 8s, we're used to 7s, whenever that email comes out that it's 5999, that 5's going to light a fire. And we're going to have a lot of people like, you know what? Yep. I hate my house. I love my payment, but I hate this place. And they'll sell their 1.9% house, go to the house they actually want. That'll be, at maybe low 6s or upper 5s. I think we'll have a lot of market activity come in as a result. I think it'll be good for the economy when we do drop rates there.
Yeah, and it'll be worth it to compromise to get a house you really want.
Yeah, and I think the inventory will come because as the rates come, we'll have people that are just like, yeah, I'll relinquish this house with this payment. And I'll turn them for something not wonderful. Again, 2 years ago, if you're 6s, I'd be that is horrendous. Yeah. And I still agree it's not a great rate, but it's substantially better than now. Because right now we have a lot of people that are just on the sidelines waiting.
Yep, and I think if you're buying a house right now, I think typically your plan is I'm staying there for a long time. You're not probably going to buy a house and accept an 8% interest rate and be like, okay, I'm going to be here for 2 years. You're playing the long game with some of these rates. So it's always good to have it in your mind. Okay, yeah, I'm buying at this, this 8% rate, but shortly here, we're going to refinance.
Right.
So,
that's a good move for right now. I think right now is a great time to buy if you're a consumer, right? Yeah. If you're selling and buying, it might not make sense because you're trying to keep that low rate. But first-time home buyers, wonderful time to buy, right? We have the inventory is not a ton, so we still have some competition. but you can be one of 2 offers, one of 3 offers instead of one of 13.
Which is how it was in 2021, whenever the rates were, 2.8, I think I remember they were. Like, whenever the competition was so insane, it was like, I mean, there were 15 offers, 20 offers on a house. Like, it's crazy. And so in that way, and I tell my viewers this all the time, you are paying more for a house because of that competition.
Oh, for sure.
So what is, would you rather pay the high interest rate with, and not pay that much more for the house, or would you rather pay a ton more for the house and have the low interest rate?
So the move is, if you think long term on it, right now's the time to buy, right? You go get the house for 8, 8.25, whatever it is. I don't think buying points makes a lot of sense because I think the writing's on the wall. The market's going to shift, rates will drop.
Yeah.
So you buy the house now with limited competition. You have a higher payment, of course, but when rates drop, instead of you being one of the 10, one of the 15 offers again, because like we talked about, everyone's going to be all excited and come out of the woodwork to buy a house when we talk about 5% rates, right? So buy it now in the 8s when you have limited competition, and then you refinance from the comfort of your own home. So you get the better house. You don't have to overbid. You can maybe get some seller's assist currently. You buy today, refinance tomorrow. When everybody's going nuts, you're like, it's tough for you, but I'm happy.
Yeah.
And now you have the house you want, the price you want, with the rate you want. So you're going to have a 30-year fixed. I'm giving a lot of people a 30-year fixed. I'm not giving anybody a 30-year loan right now. There's no one that's going to have this loan for 3 decades, right?
Yeah.
Let's just call a spade a spade.
Yeah.
I don't think I'm giving anybody a 30-month loan.
Yeah.
Like, I'd be shocked if anybody I'm doing a loan for in the past 6 months or even upcoming 6 months will have this loan for 30 months.
Yeah.
Like, I will call them and be like, hey, it's time to refinance.
Yeah.
The 8s are gone. Welcome back into more normal pricing. So, I mean, it says 30-year fixed. It's not. So, and a lot of people are doing the math as over 30 years, I'm going to spend this much money. You're not even going to live there for 30 years. Like, I personally have already purchased 2 forever homes, and I'm probably not going to be in the current one forever. Like, I'm aware of how life goes,
Yeah, I mean, I've had some dissent from consumers that are, they're arguing with me over like a 0.5 of a rate, and they're like,
this is tens of thousands of dollars over the life of the loan. I'm like,
okay, well, are you going to be in the house for 30 years?
No.
Let's be real here. So
even if you can see that they will be in there for 30 years, they won't have the loan. Because if they're that price sensitive, right?
Yes.
They're also going to notice the news in the next 30 years. It's like, hey, rates are less than 8 or less than 7.
Yeah.
You can't tell me that in the next 30 years we're not going to have rates below 7%.
Yeah.
We will.
And soon enough.
Yeah, and like I said, probably not even 30 months.
Yeah.
So that price difference, it's like, well, over 30 payments is not bad. Because it might even be over 14 payments.
Yeah.
It might be 7 payments. Like, I don't think people are going to have these rates that long.
Mm-mm.
I don't have a magic ball, but again, I can guarantee it's not 30 years.
Well, none of us can guarantee anything.
I can guarantee it's not 30 years.
I always tell people, I'm like, listen, I can tell you what I think. I'm like 98% sure, but I can never guarantee you anything. So just putting that disclaimer out.
30 years.
Maybe you're a little bit more or less sensitive to guaranteeing people things.
Listen, 3 decades from now, if you come back and like, Robert, you were wrong. Fair enough. But I just cannot imagine the scenario that 30 years goes by and you're like, should have locked in at that 8.25 and kept it. I doubt it. Okay, we got a conventional loan right now. It's a wild program. Does it make any sense to me? Not really, but we're doing it. So let's get you involved. So it's really 3% down. So which is a normal conventional loan option. You do 3% down financing. A lot of my buyers do that. Mm-hmm. However, right now, for 80% of the people that I've been dealing with, they do qualify for where lending side, we pay for 2% for free. So you get 2% from the lender and you get 1% of your own money. So it's pretty wild. She's a $200,000 loan for easy scenario. Like traditionally, 3% of that would be $6,000, right? Well, now, for whatever reason, my side will give you $4,000. So you're only responsible for $2,000, which is awesome. So you're coming out of pocket with $2,000. That's just way better than FHA. It's better than the normal conventional. And if you get seller's assist, we structure the deal correctly. I've had numerous clients buy homes for less than $5,000 total out of pocket. They're showing up to closing with $4,600, $4,800.
Yeah.
And it's insane.
Yeah.
So normally, for the past 3 years, we've been telling people, do you have $15,000? And when you say no, we say, well, that's unfortunate. You're going to rent. Because it's been too competitive. We can't get the seller's assist. There's no special programs for the most part.
Yeah.
And we're just like,
because of the competition, nobody was accepting loans with seller's assist and all kinds of stuff back a couple of years ago, but
Correct.
now they're sort of, it's flipped. So we are seeing sellers accept loans with seller's assist.
So it's really nice because we've got a lot of clients out there that like they can afford the monthly payment, even at the crazy rates. Their payment is still less than rent.
Yeah.
They just haven't been able to overcome that. I need $10,000, $15,000.
Yeah.
But a lot of people can come up with $4,500. A whole lot more people than can come up with $14,000, right?
Yeah.
So the barrier to entry to home ownership for that first time buyer
is much better now.
So much better. Like the time to buy is right now.
Yeah. And especially if you feel like, oh my gosh, I am never gonna be able to buy a house. I just don't have the kind of money for this. Again, like these types of programs are really incentivizing, especially first-time home buyers, to really pull that trigger. So yes, it is definitely a good time to buy. And I know realtors always say it's a good time to buy, but it is a good time to buy right now, for a certain sector of the population.
Yeah, it really opens the opportunity because again, your first-time people just, when they didn't have the money, realtors weren't even showing them houses because you just lose, just wasted their own time.
Yeah.
But now I've got people that are like, actually, I like the house I'm living in. They look around, they're like, I wouldn't mind owning this. Contact their landlord. And the landlord's like, sure, I'll sell it, right? Because the house is worth more than it was before. They're happy. So I've seen people not even move.
Yeah.
Like they spend zero on moving costs because their clothes are already in the house.
Yeah, I represented somebody like that recently.
Yeah.
So they called me up and they say, hey, can you represent me here? And I'm like, sure.
Yeah.
No problem.
Structure it 30 days later or 20 days later, depending on the transaction.
Yeah.
And you own where you live.
And this guy, he can close really quick.
That is true.
So, and we do a lot of relocation, me and you.
Yes.
So we got that covered as well. I know a lot of my viewers live out of state, but it might always be a good time to buy in Pittsburgh when you're out of state.
Yeah, I mean,
if you really think of it, like depending on where you're coming from, but yeah.
Well, you look back, like if we could go back 5 years, it's a great time to buy. Prices were low, right?
Yeah.
You go back a couple years, great time to buy. Rates were low. But honestly, right now is a great time to buy. Rates are high. There's less competition. So it's like, strangely, there's been a lot of great times to buy.
Yeah.
I like the current market to buy right now. If I'm the one buying a house, better because it's just less competition because a lot of people are scared of the rates.
Yeah.
And again, rates are not permanent. It'll say fixed. And again, it'll say 30 years.
It's not the be all end all.
But it's not the case.
Yeah. So, well, you know what, Robert? Thank you so much for talking with me today. If you need any realtor services here in the Greater Pittsburgh Area or the city of Pittsburgh, you know how to contact me, 412-926-0806, or email me at the email below. And what is your contact information, Robert, if they need to contact you?
You can call or text me at 717-552-8406. And honestly, even if you forget and you contact her and look at homes, she'll get you over to me. So either way, we can do group text. I can text, I can call, Strangely, I can even fax.
Yes, you're so advanced like that. Well, thank you so much again for tuning in, and I will see you all next time. Bye-bye.
Bye. Wait, that was a weird ending. Bye.
Bye.